Why am I so concerned about the weeks ahead other than the self-fulfilling prophecy that September does tend to be rough and it's been ages since we've had a real decline? Let's not waste time. I'm taking them right down. One, earnings. That's right, earnings. Call me old-fashioned, but I think the stock market is very much tied to how companies are actually doing. These numbers have been phenomenal for ages. We've gotten spoiled by upside surprise after upside surprise. Today, though, we've seen the nasty side of earnings surprises, the downside ones. And let me tell you, they're no fun at all. And we're not prepared for the damage. Two venerable companies, Sherwin-Williams and PulteGroup, both pre-announced disappointing orders. Hey, you know what that is? They disappointed earnings, top and bottom line. Why? Supply chain problems and raw cost inflation. Wow, it's a paint company and a home builder. That comes on top of yesterday's ugly pre-announcement from PPG, the coatings company that hit us with its second shortfall in a row for the same reasons. The raw cost problem now includes the price of natural gas, something we haven't had to worry about for a long time. You know, it used to hang around $3. Now it's approaching $5. That's way too expensive for a fuel that dominates our nation's power supply, serves as a basic building block for so many chemicals. The good news, none of their stocks got crushed because demand's still in good shape. That's right. I mean, they're still getting business. The bad news, these supply problems, they're not going away. Seems like they've become ingrained. No wonder the Federal Reserve's beige book out at 2 o'clock today, the board's assemblage of reports showed continued elevation of inflation. It's just true. We're stuck with it, man. That brings us to problem number 2. The Federal Reserve has made a big bet that inflation would be transitory. That's why they've continued buying bonds, keeping interest rates low. However, after these pre-announcements, where we keep hearing about rising raw costs, don't you have to wonder if inflation's more intractable than they thought? It's like that semiconductor shortage has confounded so many different industries, leading to higher prices practically everywhere you look. That's going to put tremendous pressure on Fed Chief Jay Powell to raise interest rates. And that is still, among most people's worries, more than earnings shortfalls where I'm concerned. Hey, look, this is the way people think. This is how Wall Street thinks. You want to fix the housing shortage? Raise mortgage rates. You want the semiconductor shortage to come down? Well, people buy chip-filled cars with borrowed money. Raise the cost of that money, the demand will dry up. Yes! Higher rates are the magic elixir that can break the inflationary cycle, but they do that by destroying demand, and that crushes earnings, which in turn crushes stocks.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.